Welcome back to Jersey Matters. I'm Larry Mendte. How's your 401k doing? I'm sure you don't even want to look. These days, when it comes to the stock market, people don't know whether to get in, whether to get out. What should they be doing with their finances? We spoke with Thomas Hayes, chairman and managing member of Great Hill Capital, about those very questions. All right, Tom, thanks so much. I really appreciate you joining us today. Let's get some general thoughts, okay, on the economy. I assume it's eventually going to come back. When?
Well, it's going to come back and potentially sooner than is being anticipated right now. You know, Larry, we have some really negative estimates from Wall Street, between 15% to 30% GDP contraction for Q2 of 2020, the second quarter of 2020. When you just do the math, we're about a $20 trillion economy, or $5 trillion a quarter. So let's say they're right and their dire predictions come true and we contract about $1 trillion to $1.5 trillion. And let's say it goes a little more than a quarter. Let's just take round numbers, $2 trillion of contraction. Do you know the government has already authorized close to $7 trillion? So if you think of the contraction as like a pothole in the street when you're driving your car of $2 trillion, the government has already come ahead of the fact with $7 trillion of asphalt. Let's call this economic stimulus. So it's just over $2 trillion of direct payments to individuals, unemployment extensions, direct loans to small businesses to keep people on payroll. And the Fed can extend this to another $4 trillion of loans to business. And then you have the Federal Reserve, which is buying assets to stabilize the market. And they've increased their balance sheet by $2 trillion since August. Over half of that's come in the last few weeks. So there's a tremendous amount of support for the economy that will take time to get into the economy. We're just seeing businesses get these loans, but that's going to trickle to the economy. So in the short term, we will see the short-term unemployment. We will see the contraction.
So we're going to feel some short-term pain after we get through this crisis. We're still going to have high unemployment. The GDP, you're saying, is probably going to drop even with the infusion. Yeah. When do we get back to where we were?
Yeah, so a good analogy would be the 1987 crash was the last time we had such a precipitous drop, 33% in a matter of a couple of weeks. And it took about a year and a half for the stock market to recover to new highs. In this case, you could see an instance where certainly the stock market is going to recover a little bit quicker than the economy recovers. But with the amount of stimulus, we've never had this unprecedented stimulus ahead of the fact. I think people will be happy to see once that case curve flattens, once the health is started to handle like you saw in China, Singapore, South Korea, once we see that in the United States, the economy will start to recover pretty quickly with the amount of stimulus that's in the system, Larry.
So I know this isn't your forte, but I do need to ask some questions about stocks because a lot of people have 401ks, and I'm certain they didn't pull out of the market. Most of them did not pull out of the market. They thought they were going to ride this out because most people are in it for the long haul.
You bet.
Are they going to be okay?
Yeah, you bet. I mean, for sure, if you're retiring 3 to 5 years out, this is just going to be a blip in the market, like even if you saw in 1987 when you look at the stock market. You know, if you're retiring in the next 6 to 12 months, you should definitely get with a financial advisor and say, do we need to make any short-term adjustments just because I'm going to need the income for the next year or two? For everyone else, this is a tremendous opportunity because most people are contributing every single month, and they're going to be able to buy at a lower cost for the long term, which is going to help them tremendously to catch up years on retirement by taking advantage of this and sticking to their plan is our opinion.
It's been extremely volatile. Every time the Fed says something, the market either goes up or down. Every time there's a stimulus bill and there's a bump in the road with the stimulus bill, the stock market goes up and down. Is there a way to time this? Is there a way to ride this? You keep hearing about people trying to jump in at the right times. Is that fool's gold?
Yeah, I think that's fool's gold. I think it catches up with most people. I mean, we've had a over 10% rally in the last 2 days when everyone was negative. Look, the way to win with this, Larry, and this is what we've been saying over the last few weeks, is if you're going to pick individual stocks, which most people probably shouldn't, they should just be buying the general indices over time and dollar cost averaging. You really want to be with the highest quality stocks available. So for instance, during this correction, companies like Coca-Cola were down 40% peak to trough. You think 2 years from now, Larry, you think people are going to drink 40% less Coca-Cola? Wells Fargo was down 52% peak to trough. Do you think they're going to do half as much business two years down the road as they did last year? Probably not. And what about something like Pfizer? It's been around for decades. It's going to be around for decades to come. It was down close to 30% peak to trough. Are people going to use 30% less medication next year? So sometimes in the fray of all the volatility, you just have to step back and use some common sense. If I take a 1 to 3 year view, I can win. If I take a 1 to 3 day view, well, good luck. You're going to be competing against professionals like me and many others that do this 24/7, and it's going to be very hard to win. But over the next 1 to 3 years, you can definitely beat the professionals because you don't have to answer performance on a monthly basis.
Well, I love your optimism. Thomas, thank you so much. I really appreciate you joining us today. When Jersey Matters comes right back, a lot of athletes have been training for the Olympics in New Jersey. Now they're not sure what is going to happen. We'll talk with them.